Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is Monday, April 17th, first day of a brand new trading week. If you have not hit that subscribe button and joined us on Vested Interest, the Vested Interest community, go ahead and do that right now. Hit that subscribe button down below. Join us on this channel. We cover dividend growth stocks like Occidental Petroleum, which is what we're going to cover today. It is a Warren Buffett favorite. He's been adding significant amount over the last couple years to this position. Let's jump right in and see if we can see what he sees. And if you are new here, this is my investing criteria, or old. So this is relatively new that I've added what I look for in a business. And I am not Warren Buffett, but I definitely like to look at the businesses he is invested in to see if I can learn something. So the first up, understand the business. You want to find growing free cash flow over the last 5 years and expected free cash flow in the future. Dividends are paid out of free cash flow, so you want to make sure that they have plenty of free cash flow and growing free cash flow to pay those growing dividends. Growing dividends is the next one, right? We want to see growth in our dividends, and that's negotiable. If it has a real high payout or a real high yield, it might forego that one. Dividend payout ratio of 75% or less, unless it's a REIT or BDC or another company like that that pays out a higher than 75% by law, right? So looking for 75% or less. Check valuation based on dividend yield theory. That is a quick gauge of whether a company is evenly valued, overvalued, or undervalued. I will show you that here in a minute, right? Current yield above 5-year average is buy, it's undervalued. A current yield below 5-year average is a hold. Overvalued. Current yield equal to its 5-year average is fair value. Buy below current cost basis if it's already in my portfolio, or within 15% of 52-week low if I'm looking to add something, right? I want a high ROIC, return on invested capital, and return on equity equal or greater than its industry average, or 10% or greater. And for financial companies, I throw this one in. I'm looking at price to book, and I'm looking for near or below 1 being typically fairly valued, anything under typically being below value. And it must meet at least 4 of the 7 if it's not a financial company, and it must meet 5 of 8 if it is a financial company. Now let's jump over to Occidental. All right, if you want to know more about them, check them out, www.oxy.com. That is their homepage where I pulled this information from. Oxy operates world-class energy and chemical assets around the globe, including in the United States, Middle East, Africa, and Latin America. Over our 100-year history, we have built a vast infrastructure of integrated operations around the world that deliver reliable energy and essential products. So oil and gas, that's what they do, right? They've been around for over 100 years, which is nice. So they've seen a lot of downturns, right? Multiple wars, Great Depression, Great Recession in 2008, housing crisis, bank crisis, oil runs in the 70s. I mean, you name it, they've seen it. And I wanted to highlight one other thing that I think is interesting that they are involved in. Carbon innovation. Oxy is advancing and accelerating carbon capture utilization and storage CCUS technologies for sustainable CO2 reduction. So that's a big one a lot of these oil and gas companies are getting into, right, to offset their footprint. Carbon capture, I think, is a big one that's going to be out there. A lot of companies are going to use this as a way to offset their carbon footprint, right? So I think that's a big industry that's coming up, and the more I see it out there in these oil and gas companies, the more I am interested to understand it and see where the value may come from in the future as we shift from oil and gas companies to carbon capture like this. I think that's another opportunity for them to continue to advance. So again, www.oxy.com. If you want to know more about them, go check them out there. You want to understand what businesses you are buying. So just because Warren Buffett buys it doesn't mean you should jump out and buy it. Still understand the business. Next up, the reason we are looking at Occidental Petroleum Corporation, ticker OXY, out of the energy sector. They were down 2.39% on the day. Closed the day out at $62.94, down $1.54. 52-week range as low as $51.53, as high as $77.13. So it's kind of floating in the middle between the high and the low over the last year. Average volume is 14.1 million. Today's volume was 7.4, and you can clearly see a pretty steady sell-off throughout the day. Market cap of 56.527 billion, a beta of 1.81. Extremely volatile company, right? Very high beta here. That's what beta means. Volatility of the market. 1 means the market, right? It's even. Anything above 1 is more volatile. Anything below 1 is less volatile. So this one is almost twice as volatile as the overall market. Price to earnings, PE, is $5.08. So that's low, very low on its PE ratio. Earnings per share, EPS, is $12.40 per share. That's very high. Next earning dates coming up is May 8th through May 12th. And forward dividend is 72 cents. They are a quarterly payer. We'll see that here in a minute. And their yield is currently 1.12. Low yielder here, so it needs to be very high growth in the dividend yield. We'll see if it is or not here in a moment. Ex-dividend date was March 9th. So we'll see the payout date, but I believe it may have already paid out from that March ex-dividend date. We'll see that here in a moment. And according to Yahoo Finance, where I pulled this information, not affiliated, just one of the sites I like to look at, they have a one-year target estimate of $71.63 for the stock price. So it speaks to some potential upside appreciation. Now, I always want to get in and look at more. So if you're interested in this company, go into Yahoo Finance, pull up this Occidental OXY ticker, get into statistics. One of the things I like to look at is dividend yield theory, right? So its 5-year average dividend yield is 5.19, right? Its current forward annual dividend yield, there's got to be something wrong here. That can't be right. 5.19 is really that? Was it really that high? So they have really dropped their dividend off somewhere along the way. Their 5-year average 5.19. Their current dividend yield at 1.12 is much less than that. So that would speak to some potential overvaluation here, right? But they may have had a dividend cut here. Trailing annual dividend yield 0.81%. I don't know. This may be off. 5.19 because their trailing annual dividend yield at 0.81% would not match up to their 5-year average. So this one you'd want to look at a little more. I would go by this trailing, and if it is, the trailing is correct, that would mean that this would be potentially undervalued because it's higher than the current. But this rate, the 5-year average, there's something wrong here. So I'll have to go do some more research on that. That's extremely high, though, if it was that high. Another one I like to look at is the financials. You can get in there, look at their income statements, look at their revenue, look at their debt. I mean, there's a lot of information in here. One of the things I like to look at, again, growing free cash flow. You want growing free cash flow over time because that is what the dividend is paid out of. So you go back to 2019, it paid $566,000. 2020 paid out $788,000. Big jump up into 2021, $7.4 million. 2022 up 12.4. But overall, definitely dividend growth, free cash flow growth over time here. So that is what you're looking for. At least over the last 5 years. We'll see what 2023 has, right? Hasn't reported out yet. And that's according to Yahoo Finance. Again, I always recommend more than one source. So another one that I like, we'll jump over to stockanalysis.com. Not affiliated with them either, but I always recommend more than one site so that you can back check the information that you're getting is accurate, right? Like that dividend yield that we saw there. I don't believe that's accurate, so I want to look for that in another source. Now, on this one, they've had 32 stock analysts take a look at this. They call it a consensus buy. It is kind of right there on the edge of a hold. They have a low estimate, and this might be why it's kind of on the edge of the hold. They have a low estimate of $47.47. That would be a 24.58% decrease in the stock price, and that would be a new 52-week low compared to what we saw on the previous page. They have an average estimate of $72.47. That would be a 15.14% increase. And they have a high estimate of $97.65, which would be a 55.15% increase in the stock price. All the while, you could collect that 1% plus dividend yield. Now, another one, same thing. You can get into statistics. One of them I like to look at for the ROIC and the ROE is the statistics tab, dividends tab, right? We'll see that here on the next slide. And the forecast is what we're looking at down here. But on this one, for the return on equity, 44.8%. That is amazing. Very high return on equity. And return on invested capital, 17.5%. Another one, very high. So very nice to see. So this one so far is fitting the criteria outside of dividend yield theory. And let's jump over and look at the dividend payout. So they do have a 3.9% payout ratio. It says extremely fast dividend growth, 256.25%. That's pretty amazing. I'm assuming that is just these last ones here. It had a long stretch from 2020 to 2021 where it did not grow the dividend at all. I would go back and look and see if there was maybe a dividend cut way back here. Maybe that's why their 5-year average is off. Down to 10 cents, actually 1 cent there, then jumped up to 13 cents. So only a penny there for a couple years. They may have cut the dividend back here. And then they went up to 13 cents and then went up to 18 cents. So I can see why the dividend growth is so fast. I would not say that it's going to sustain 256% dividend growth, but man, that's extremely impressive and a very low payout ratio. So they could continue this dividend growth for a while till it got up to maybe the 30-40% range, and then you would a 50% payout or something like that. They are a quarterly payer, right? They did pay out April 17th, actually today, so their payout was today. So that's probably part of the drop in it here, right? So if you buy them now, you would be in line for their next dividend payout. That's what I'm getting at there. So it looks interesting. Like I said, it is a Warren Buffett stock. Personally, I am not really looking at anything in the energy sector right now, but this one is a bit interesting. I would like to know what's going on with that dividend. And when it shows a 5% dividend yield and then back to 1% there, something either Yahoo Finance is reporting it wrong or they cut a dividend back here somewhere before 2020, right? Zero point 0.1 cents. 0.1 cent is extremely low, but then they have risen quite a bit over 2022 and 2023. So looks interesting. Might be a company to look at if you're looking for something in the energy sector, and it is one that Warren Buffett has been adding over the last couple of years, if that gives you any idea of what kind of company it is. Well, these are quick hitters trying to find value in the market. A lot more green here lately, so it's harder and harder to find value as these stocks continue to rebound, but there still are buys to be had out there. So make sure you're doing your research. Make sure you understand the company. Make sure it's meeting your criteria. Don't just copy my criteria. Make up your own decisions. That's why we call it vested interest. You need to have a vested interest in your financial future. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button down below. Help me get to 1,000 subscribers and beyond. Eventually, I'm hoping to get to 1,000,000 subscribers. I think we'll get there one day, but it's going to take your help. So do that down below. It doesn't cost you a thing. It really helps out a small YouTube channel like myself. So again, like the videos, comment on the videos. Share with anyone you think might find value with the videos. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have some stocks you'd like me to cover on a Stock Pick of the Day series, go ahead and put that down in the comment section below. I'll work it into the videos. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk, handlers money. Should never invest in any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice, counsel, or a certified financial advisor.